Very good afternoon, everyone. Welcome to today's uLaw webinar. I kindly do request if you could mute your phone lines. There seems to be a bit of a disturbance. If you could kindly mute your phone lines, that'd be great. Very good afternoon, everyone. Welcome to today's uLaw webinar. I do apologize for that slight delay. I would appreciate it if you could kindly mute your phone lines, and please use the chat window at any time to ask any questions that you may have with regards to today's webinar. Today's webinar has been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. So it's for 1 hour of professionalism credits, and I'm going to try and keep up the time within that 1 hour. The title of today's webinar is Law Society Bookkeeping Compliance. Okay? So the essence of today's webinar is really to look at the expectation from the law societies across various jurisdictions and understand the specific bookkeeping or financial document keeping obligations that you have as a legal professional when time comes to audit, or the expectations that is set upon yourself to be able to generate these documents on a time period basis, on a regular interval. Okay. Now, like every other uLaw webinar, today's webinar has a very specific agenda. We're, of course, going to specifically talk about those documents that you need to keep ready and be prepared for. The webinar is also going to highlight key data elements that you need to keep in mind that really form the foundation of these documents and reports. Because at the end of the day, the report is a reflection of the data that exist that represents the financial transactions of your firm. So some of those documents, of course, include the ledgers. So a ledger is a document that is something that you would have to keep in mind for both your trust account as well as your general account. So we're going to really talk about the importance of those ledgers, how easy is it to maintain them, and why it's important for you to do so. And we'll then talk about another pair of documents, the journals, and we'll also talk about money received and money that's been dispersed and how the journals reflect these financial transactions, and a subtle difference, if you will, between ledgers and journals. I did cover that briefly during my webinar last week on disbursements, so you could always check that out on our YouTube channel, and we highly encourage you to utilize all of those pre-recorded CPD professionalism credit videos and webinars as well. And then for one of the most important, I would say, function or action that a legal firm would need to do on a monthly basis, and that is truly to reconcile your books, reconcile your accounts, and really truly understand how can you maximize the time you have by spending minimal time on this reconciliation process. And that's the ideal state, and that's the goal for the law firm. What are those important steps that you have to design right from day one to be able to accomplish that? Okay. Some other important bookkeeping documents or compliance documents include the fee book, jurisdictional documents such as the Form 9A. So in the province of Ontario, for specific reasons, if you look at Form 9A, it's a document that is required for legal professionals in the province of Ontario that do electronic trust transfers from their trust account to their general account. And for each transaction that you have, it's important that you have a Form 9A that reflects that transaction. Okay? And then the big question is, let's say these are the set of documents and the set of functions that are required to be carried out by a legal firm on a, let's say on a monthly basis at a minimum. And how do you ensure by design from day one that you have a process that you can follow to make the generation of these documents as seamless as possible? Okay? So really that's what we're going to be covering in today's webinar. I do welcome everyone who has joined us. I request you to kindly mute your phone lines, though I have muted the main line on the webinar call. And if you have any specific questions, please use the chat window to use that to ask us at any given time during this webinar. Once again, the title of today's webinar, I'm going to highlight that one more time today, is for Law Society Bookkeeping Compliance. That's the title of the webinar, and you should be able to use this and get 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. Okay. So let's start off with the ledgers. So one of the most important documents that you need to keep in mind that you do, of course, have to generate and provide when being asked for during an audit. And depending on your firm's situation, and if you currently do have both the trust account as well as the general account as vehicles for financial transactions, then of course you would have to maintain ledgers for both trust and general. If you do not use the trust account, and if you're only exercising the general account, then you will only have to worry about the general ledger. Okay. Now what these ledgers, journals, all these documents are looking to reflect is paint a picture to the auditor, paint a picture for anyone who's viewing these documents about the financial transactions that have occurred over a time period for which this report has been generated, and viewing it pretty much gives them a snapshot of what's happened with money coming in and money leaving the important accounts that your firm has. Okay? Keeping that as the essence, if you were to look at a law firm, you of course appreciate that the law firm would have transactions where money is received and money is dispersed or spent. And when money is received, you of course have a couple of gradient points that further highlight the story of that particular transaction. So let's say you received money, then of course we've discussed this in other webinars too. It's important for you to transfer the knowledge to the auditor or for anyone who's viewing it as to who that money was received from. And it's important when that money was received to capture why did your firm receive that money? How much did your firm receive in that transaction? And let's say your firm has multiple business bank accounts. Which bank account should one expect that this money has been deposited into? Okay? So of course, those 4 or 5 important aspects. So when was this received? That's another very important, I would say, attribute of that particular transaction. Okay? So there's 5 to 6 different attributes or elements that cover that particular story of money being received. Likewise, there are attributes of storytelling about how the money was spent or dispersed. So whether that's an office expense or whether that's a disbursement or a client transaction for a matter, whether it's a court fee as a disbursement or whether it's paying the rent for your office on a monthly basis, that is a financial transaction that is leaving one of your bank accounts, and hence a story needs to be told about the attributes and what's happened around that financial transaction. Which bank account did that money leave from? When did that money actually leave the bank account, or when do you expect to have left? Who was this paid out to? What was the amount? Were there any taxes involved, depending on your jurisdiction, right? So every transaction, both received and dispersed, has a story, and that story needs to be recorded in one or both of these ledgers, trust and general, depending on the situation of your business. Because these are financial transactions, another important aspect is what's called a running balance. The running balance keeps a tab and tells a story of what was the last outstanding balance in that bank account as per a specific date. Okay? And each ledger, both trust and general, require that running balance. And if you look at some of the examples that we've taken from the Law Society's bookkeeping guidelines, if you look at the trust ledger on the left-hand side, and I'm going to quickly annotate this, you clearly notice that on a client's trust ledger for Ms. Leslie Lawyer, you have the date, you have the particulars, of course, an attribute of the storytelling about the financial transaction, another attribute, which is the money received, the amount, and as of August 30th, let's say no other transactions have ever touched the trust account. As of August 30th, $40,000 was received is the opening balance. But the entire story changed on the 31st of August, when that amount of $40,000 was transferred from the same account, which is the client's trust ledger trust account, was dispersed, or money was spent out from that same account, leaving the balance at zero. 40,000 came in on the August 30th, 40,000 left on the 31st, leaving the balance at zero. Likewise, let's take another matter. So this was for the Kim Kirby matter, and this is for the Peter Piper matter. On the 5th of July, you received a retainer, or this particular firm received a retainer of $565. And as of July 5th, that was the balance. But on the 14th of July, once the matter was complete, the law firm, of course, did the transfer of that money, what's called the eligible trust transfer. And on the 14th, that amount was transferred through this legal document called an invoice 002, and that money was taken out of the trust account and transferred into a general account, say, again, leaving the balance at zero. It doesn't always have to be where it's zero, but on a specific matter, of course, chronologically, you would expect over a period of time that that matter, logical closure to it, would have where the amount is zero. But let's say that this transaction did not occur. Let's say you did the reconciliation of this account on the 6th of July. The outstanding balance left for Peter Piper would be $565. Okay, and that's what's expected as as part to be of the reconciliation document called the client's outstanding balance or the client's trust listing. It lists down, as of July 6th, all of the outstanding balances for each of the matters that your firm has an account for. Okay? Very similar, if you notice the general ledger on the right-hand side of my screen at this time. You've got a particular fee that was generated, and this is just general. There's no trust involved. You've got a $100 bill of fees, a $13 jurisdictional tax in the province of Ontario, harmonized, and the balance owed is 113. Okay, because you did the work, you're charging the client $113, and that's the balance. So let's say on July 15th, the balance owed would still be 113. But within the 30-day notice, your client paid for this invoice of 113. That was money that came into this general account, leaving the balance at 0. And if you notice, this particular transfer from the trust account for Peter Piper of 565 on July 14th was what was received here into the general account. Okay? On the 5th of July, you received the retainer from Peter Piper. On the 12th of July, your firm has generated an invoice reflecting the work that's been done from the 5th to 12th through this invoice number 002. And right away on the 14th, your client, Peter Piper, paid that, or rather, because this was a retainer, he didn't even have to pay. You did the trust transfer for the 13th. So you can see how, by looking at these two documents, a story can be weaved. And that's the story that the auditors are expecting to see and visualize and ensure that there are no difficulties in understanding the story, or there aren't any jumps and hoops which could lead to any misappropriation of funds, which would then be not legally viable. Okay, so that's what's being expected, and it's important, first and foremost, to capture the elements and attributes of these transactions, and then tell the story through these ledgers and journals. Now, the ledger, of course, tells a component of the story, and then let's say they want to have a deeper dive into the storytelling. That's where you have a journal, which gives an added element to the whole storytelling. The journal talks a bit further than what the ledger talks about, and that is, it talks about what was the purpose of that particular financial transaction. And it also talks about the method through which that particular transaction was received or paid out. It was all part of that data capture of the attributes. But the storytelling and whether those data elements are written in a particular story, whether it's ledger or journal, differs based on the columns and the data that's being recorded. You did notice that in the ledger, we didn't really care for the method of how this $40,000 was received, or for what purpose. Of course, you do have the particulars, but specifically what purpose it was for, and who it was paid to. Whereas here in the journal, both for receipt and for disbursement, you do have that information. So if you look at the trust receipt journal, for the same Peter Piper July 5th transaction, let's go back to the ledger. Here's the story. You know there's a retainer that was received, 565. Let's say someone looked at this and said, all right, I don't know how this was received. Can you tell me, how did Peter Piper pay you? That's when you generate the journal, and the journal will tell that auditor, here you go, sir or ma'am. On 5th of July, I received it from Peter Piper, and it was because it was a corporate retainer that he paid me for. You know the amount already, but here's the answer to your question. He paid me using a check. The story is now complete for the main elements that's being expected. Okay? Likewise, for the receipt. So if you look at the transfer of that trust transfer that happened on July 14th, yes, you do recognize that it was the July 14th. The transfer, or where did it receive, where did the amount come from? It was a trust transfer from the law firm's trust account into the general account. What was it for? It was based on the invoice of 002 for Peter Piper. Perfect, you know the amount, but here's the final question that was asked. How did this happen? What was the financial vehicle that was used? The law firm wrote a trust check, and the check number was 001, making it easier for you to reconcile. So if you look at check number 001, and let's say you look at the copy that you have, you would notice that this would be for 565 that you've written to your own firm from the trust account into the general account, more like a remittance, right? So that's what a journal captures. So just to summarize these two important screens, which pretty much gives you an idea of what's expected, financial transactions occur for your firm on a day-to-day basis, on a monthly basis, and they all accumulate over the year and over years. And all that's being expected out of you is having a process to begin with to ensure that you're capturing all the attributes of these financial transactions, be completely aware of those transactions, the attributes of those transactions, so that you capture them. So when you're accepting a retainer, your bookkeeping system needs to be fully aware, needs to have that cognizance of accepting information such as the date, the particulars, the amount, the taxes involved, purpose, who was it for, which matter, the amount, the method of payment. And now all those attributes, once captured, make it easier for you to reflect on each of these documents as needed through your storytelling to your auditors. In one document, you don't, such as the ledger, you need everything except for the method, the particulars, whom it was paid to. In the journal, you have the method and story and step. Okay? And what's the basis of why someone should accept that these transactions occurred? Why would an auditor agree that yes, on July 5th, just because you're putting this in a document, that it was received? The proof and the fundamental truth behind these numbers come from this process that's called as a reconciliation. Now, one place that for certain everyone believes, telling the truth, is the bank, right? So the bank, whether that's TD, RBC, a credit union bank, or any other financial institution that your firm is engaged with, the bank has a clear indication of money coming in and leaving those accounts that was built for your firm. If you have a trust account, you don't have the trust account in your office. You have it with the bank. And the bank has those transactions of ins and outs. But the bank does not tell the picture of what the journals and ledgers say, but they do confirm and tell the truth that these transactions and the numbers do exist. For example, if you were to sometimes deposit a couple of retainers together, let's say you've got $565 from Peter Piper and another $1,000 from another client. And if you go to the bank sometimes and give it to the teller, it may so happen that they may combine both those transactions and indicate to the bank in the bank's details as $1,565 on July 5th. Now, unless you have a bookkeeping system that can clearly demarcate that $565 was for Peter Piper and $1,000 was for, let's say, Alexander, you don't have that control of knowing which amount belongs to whom. And that is why you need the bookkeeping system to assist you in the memory of these transactions. But the truth of the transaction that it has occurred, and yes, it's validated, comes from the bank. And the process of reconciliation is to marry these two elements of that storytelling. One is the truth of what exists in the bank, confirming with knowing what those numbers were for with your bookkeeping system. And the Law Society, again, through reading this reconciliation document, are able to picture a story that they want to understand. And from a trust reconciliation process, there are certain steps that they require of data elements that they need to capture in this particular document. Just like how there was a certain method to the madness of what's expected in the trust ledger and journal, there is a method to the madness of what's expected in a trust reconciliation report. The first step, or the data elements that need to be captured, as we've outlined here in step 1. And once again, this is a simple example that we've extracted from the bookkeeping compliance document published, and you are able to Google this, download it, and use it for your reading pleasure. The first step really is recording the bank statement and the balance. So this is where you're establishing the truth and looking at the bank, saying, what is the balance? The balance is, of course, an accumulation of all the balances that have been contributed by each of those matters that you've dealt with. So Peter Piper had $565, you've had Alexandra adding to $1,000, so on the July of 6th, you should have had a balance of $1,565. So likewise, at the end of every month, balances in trust accounts that have not yet been accounted for, or maybe in between the matter, you have not completely utilized and transferred all the money. So all those balances add up. And that's the number you should see here as the example here as $40,933. So that's the bank balance. That's great. So at least you have a starting point for the truth. Then comes the second aspect, which are the outstanding checks. Outstanding checks. So there's two aspects to, again, these are some of the variances that happen. Right? We spoke about financial transactions. Here's where there's a bit of shade of gray. Let us assume you had paid out through using a check. You paid a disbursement to the court. So in your bookkeeping system for this particular matter, $100 should have been accounted for as having dispersed, so it should reduce the amount by $100. And let's say on the 28th, or let's say the 15th of February, you generated that check and mailed it out. And for whatever reason, let's just assume that mail did not receive that party, or for whatever reason that other party did not encash that check. They have not yet received it or have not yet deposited that check that they received from your firm, and hence your bank will not reflect that reduction of the $100, because in real life no action has been taken to deposit your check. It's just you clearing your conscience, your aspect of your story, telling your own bookkeeping system that, you know what, I wrote this $100 check. Ideally, it would have been left from my bank. If such an anomaly were to happen, and it happens, especially on the day when you're reconciling, let's say, then you need to account for those outstanding checks. Now, the other way around happens too. Your client provided you with a payment, and they gave you a check or a retainer. Of course, with retainers in this case, very important that you do have to deposit these checks anytime you receive money, especially if it's cash, because you are able to accept cash retainers up to $7,500. You have up to a day, 24 hours, to deposit it into your trust account. But if your client gave you a check, then you have to deposit that check into the trust account and have that money deposited. But let's assume someone gave you a check, you put that in your office drawer, and then you totally forgot about it. Okay? You have accounted for. You are very, very process-oriented, so you got the check and you right away went into your bookkeeping system and you said, hey, I just got the retainer. You've even given the retainer receipt to your client saying, thank you, sir. Thank you very much for your retainer. But there's one step that you have to do in real life, which is take that check and deposit it into the bank. Only then will the bank reflect an addition of $1,000 in your bank account. So let's say on the day of reconciliation, you have not yet deposited. You will notice that your bookkeeping system would have accounted $1,000 more than what's actually reflected in the bank. So now there's this difference between what your bookkeeping system says and what the actual truth happens in the bank. How do you account for these anomalies? That's why you have the outstanding checks and outstanding deposits to tell that story. To tell that story to the auditor saying, life happened. For whatever reason, that check did not get deposited. For whatever reason, this money was not encashed. And you can see why the difference of that, when I add it to my bank balance, is what's left with me in my bookkeeping system. So you can see $39,476 and the $250 of outstanding checks is what accounts together as the $40,000. So step 2 and step 3, step 2 rather, is the outstanding checks. Now step 3 is, let's say you do have this trust bank balance of $1,700. How do you have a balance of $1,700? That's another question the auditor wants to know. Who are those clients whose matters have an outstanding balance that have still left to you having the $1,700? So you can clearly say, that's step 3. This is where you need to list all of your clients, all of their matters, and their outstanding balances. And if you can provide this listing, and they all add up, your reconciliation and clarifying the truth with your bookkeeping system is 100%. So you say, I have a balance of $1,200 or $1,120 from Peter Piper. I have a balance of $72 only from Silver Susan. And I have a balance of $523 from Taylor Terry. An important aspect to capture in step 3 is what was the last activity date. And why does the Law Society want to know this? It's because if this date is somewhere in the very past, so let's say it's been there for 5 years, and you're being audited, the auditor is going to say, you know what? You should have by now reached out to Susan Silver and dealt with the $72. Either refund that retainer or utilize that retainer amount, generate an invoice, and get that paid off. Because it's far too long that you've been holding this retainer without any action being taken. Or if there's a reason, then they would ask you for it. Okay? And hence, it's very important for you to keep a tab on the last activity date, that it's not as old more than 2 years. Anything further than 2 years needs immediate attention. Okay? And step 4 is really comparing what your bookkeeping system is telling you to what's actually in the bank. So total reconciled trust bank balance, so $1,715 is what the bank is telling you. And how you account for the $1,715 in the bookkeeping system, it's a combination of the $40,000, the $39,000, the $250, and also a bank error, unfortunately, that occurred that needs to be dealt with. That's how they balance, and once they balance, you have now given positive confirmation that all these transactions are the truth, and hence when you generate these ledgers and journals after the fact, confirming the reconciliation, your auditor knows for fact that those numbers are right. And that's the authority that they have to recognize that if you've done your reconciliation for that month, the general ledgers and journals for that month and the numbers in it are accurate. Okay? I hope I'm making sense. Of course, I know it can be a bit confusing, especially to deal with numbers, but I'm definitely trying to do my best to kind of portray the storytelling aspect of it and why someone's expecting all of this out of you. Of course, to keep the sanctity of the legal business, because you're one of the very few businesses in the industry that can accept money in advance prior to doing work, and hence there's quite a few checks and balances that those monies are not misappropriated, because that reflects badly on the community and the profession. And unfortunately, it has happened, and that's why the further scrutiny, right? Okay, so we've looked at reconciliation. Almost, I would say reconciliation is probably the first document you generate, so you kind of solidify the truth between your bookkeeping system and the truth of the bank, confirm to it if there are any anomalies, problems. Again, no one's trying to cover up problems. This document is pretty much for you to tell the truth about if there are any problems. So these are problems not because of you, these are just problems because of life. It existed. Someone just did not deposit the check you put in. Not your problem, but unfortunately, you have the responsibility of maybe calling them and letting them know that they haven't encashed your check. Please do so. And unfortunately, sometimes if you've dropped the trust check in your drawer and did not deposit it in time, then that's a problem. But you face it, you tell them that's what happened, and you move on. So start with the reconciliation document, followed up with the ledgers and journals. Trust general ledgers, 2 documents, and then you have the journals for disbursements and receipts. Okay, that's 4. 4 plus 2, 6, reconciliation 7. Then there's a document called as a fee book. Now the fee book is, let's call it a revenue book. Okay, fee is really all the fees that you've collected. It pretty much is a report that captures data regarding invoices that include fees and disbursements that have been generated as part of that particular invoice. Because both of them are recoverable from your client. So we've discussed this in the previous webinar. A disbursement is nothing but a recoverable expense. So once recovered, it is a revenue. Until you've recovered it, it's an expense. Once you've recovered it, it's a revenue, the disbursement rather. Because you cannot recover a rent from a client. You can recover a court fee that you paid for on their behalf. Ideally, the client should have gone and paid the court fee at the court. But again, that's not how it works. You as the legal representation are able to do that more fluently on behalf of your client. So in a way, you're doing them a favor, but you're doing that through the transaction of a trust or otherwise to help facilitate that whole transaction. So the fee book captures the story with the important data elements of the invoices, the fees, and disbursements that were included in those invoices. Not only is it an invoice, every invoice, of course, has an invoice number. Now, this is, again, the audit trail, the backtrack to make sure that the auditors agree and accept that you're telling the truth. You're like, I just got $1,000 because he made a client payment. Okay, what's the proof? What is the reason for the client payment? Oh, I actually generated an invoice. That's not good enough. Show me the invoice. And if the invoice doesn't have an invoice number, then it's harder for them to match the following. So match the payment to a number, right? So hence there's an invoice number, there's an invoice, and there are, of course, the fees and disbursements that form that invoice. What other attributes of that storytelling do you need? Which client was that particular invoice for? And did you collect any taxes as part of those invoices? Now that's very important because any taxes collected in the jurisdiction, you do have the responsibility to understand how much of taxes you paid and then pay back that to the government. And that's another thing that the auditors want, is that you're compliant with the CRA, making sure you have a process to collect taxes and also represent those taxes collected in a document. So these are the key components of a fee book that is, of course, expected by the auditor, of course, by the Law Society, and the auditor is the representative who is taking your story and telling back the Law Society that this law firm is fantastic, they told me the truth, I love their story, everything seems fine. And they're actually set up to be compliant by process from day one, because you have a process, you have a way of managing the capture of data and reporting it in the important documents that is expected. Okay? So you can see clearly one other example provided by the Law Society for the same Leslie lawyer. On July 2nd, an invoice was generated for Jackie for $113. And what is the story behind it? There was a $100 fee, maybe a flat fee of $100, but it also included, the 113 included a $13 HST. So that's, taxes received. Okay? And our famous Peter Piper, on July 12th, we generated that invoice. And if you remember, July 14th is when we did the trust transfer. But for you to do the trust transfer, you do have to generate this formal eligible document called as an invoice, and you have an invoice number as well. Very straightforward. The date, the invoice number, who was it for? In fact, it goes specific to the point where you can even mention the matter. In fact, you should mention the matter information of this particular fee. The fee, the disbursements, if any, in this case, of course, in this particular example, there was no disbursement, but imagine there was a court fee of $100. This would be $665, for example. Okay? All right. So the eighth document really was the fee book. Now, based on the jurisdiction, for example, in the province of British Columbia, I don't believe they call it Form 9A. I don't believe it's called Form 9A. It's more for Ontario, the province of Ontario, where it's called that. The Form 9A, I mentioned it earlier, is a document anytime you do an electronic fund transfer. So in the case of Leslie Lawyer, they had written themselves a check, right? So they wrote themselves the check 001 and transferred it from their trust account to their general account. But with the advent of technology and, of course, in today's modern day, you do have the online banking. So typically a legal professional in today's modern world would log in to their TD, RBC, CIBC account. The trust account is yet another bank account that's listed. And once it generated 565 as an invoice, that lawyer or paralegal or legal professional would log into their account and transfer money, the eligible money of 565 from the trust account electronically into, let's say, their general account. And if you do so and use the electronic means, in the province of Ontario, there's a Form 9A that needs to be filled out, which captures the name of the client, the matter number, the reason for transfer, the invoice particulars, right? The date, the information about both the trust and the general bank accounts, and they do require you to sign it. That's a Form 9A. Other documents also include the likes of deposit slips. And you can see we mentioned about all those deposits and outstanding checks. So these are all the audit trail documents that support your stories. Okay? If you've got any cash receipts for payments, having that handy would always help. Perfect. So we've got another, I think, 15 minutes, and I want to leave 5 minutes at the end of the session, and before the end of the session for Q&A. So I have another 10 minutes to cover the remainder of today's content. And the essence truly is, now that you have an appreciation for the documents, so with FeeBook there was 8, and depending on the other documents, Form 9A deposits, you have about 10 to 12 documents that you have to capture on a monthly basis. But the number one document that's very, very important is the reconciliation. I'll start there, right? Data capturing is very important. And for you to be able to reflect this in a very financial savvy way, it's important to keep in mind that every transaction that occurs is what's called as a double entry. So the minute you've generated an invoice, of course, it goes into your general ledger, but it's also a transaction in your accounts receivable. Okay, if you've just generated $113 worth of an invoice, of course it's going into your general ledger, but it's also going into your accounts receivable, which is not a bank account, but it's a bookkeeping account to help manage the double entry, because then you can be reminded of the amount of accounts receivable that the clients owe you. Likewise, accounts payable. Once you've received, let's say, money into your account, of course it reflects in your general ledger as money received, but it also needs to reduce the amount of accounts receivable. So if you've received the $113, you have to notify that you've already been paid for. The accounts receivable just reduced by 113. So it is a double entry system. And the whole story behind this particular slide is, in today's modern world, you as legal professionals who are part of this webinar and others who would be listening later on YouTube have the options of not having to do this the manual way, not having to do this the non-tech way, with very minimal investment, with cloud being a big differentiator in today's day and context for very cost-effective prices with limited learning curve. There's, of course, a certain learning curve associated with how to use this system to enter the data, how to click on buttons to generate reports. So any tool that you use, there is a learning curve that you should be prepared to invest. It's more of an investment to save all the time that you're going to be saving from not having to do this the manual way, or not paying for it at a much later time as a mere fear factor to catch up for all the lost time. Because mind plays games, right? If you're pushed to the corner and you're having an audit tomorrow and you haven't done any of this in time properly, or it was all manual, you just need a single click of a button to help you out with. Of course, there is no single medicine to help you, but there's time and effort required to help you with that stage. And time equals money. Time and effort equals money, and that's sometimes the reality of this space. So if you can have an understanding of what's really expected from day one, have a process, have the right tools and techniques to utilize and formalize those processes and automate them as much as you can, then you're really setting yourself up for success, because these are all back office processes that are really not front of your mind when you start a business or when you're just starting a new year for your business. Your thinking is, how do I go out and make more clients successful? How do I generate revenue for my firm? How do I reduce my expenses? How do I stay cash flow positive? How do I stay profitable? All that good stuff, right? So no one's really talking, how do I be compliant from day one? But if you choose the right tools that are by design meant to keep you compliant from day one, then it's really your unbelievable sidekick that you've just discovered. So do your due diligence, understand the pros and cons, and have legal accounting as top of your search when you're looking for the right tools to help you through this journey. That's the big message, really, because the legal accounting software does incorporate all those processes, tools, and techniques to keep you compliant from day one. It's just a matter of knowing how to use it for across your firm and knowing which buttons to click at what times to capture the data and to report the data and tell the story. Okay? We often talk about this across all of our slides. Of course, as I said, legal accounting, very important in your search. Another aspect is, let's say you don't have, like, whatever, I don't need a legal accounting, I'll do this myself. Then it's important that you have the right process when you're doing this manually too, and that is to always capture as much as you can, as much as possible can, capture these transactions as and when they happen. The analogy that I often provide in my webinars is the common story that we're always told as kids by our parents. Do a little bit of reading every day so that when time comes to examinations, you're well prepared. or be attentive in class so it's already there in your mind. Don't wait for the last minute to read them all up. Because if there are 30 chapters that have to be read up for an examination, and you haven't necessarily brought that. Again, I know I'm preaching to the choir, but sometimes just repeating what's important helps to ingrain it and actually follow it, I believe. So I know I am preaching to the choir, I will repeat saying that if you can do every single step, a small step goes a long way of capturing data as and when it happens, studying chapter 1, chapter 2 as they're being taught, helps you to be audit ready from day one, helps you to be prepared mentally for that examination, and of course, having the right tools can help you get there faster, more seamless, lesser time constraints, and of course, gives you that peace of mind that if not for yourself, at least the processes and the tools, techniques that are incorporated by the products that you're using has your back to stay compliant. Okay. Alrighty, so I'm going to spend just another 5 more minutes before I kind of bring this to a Q&A session, because I want to be very cognizant from last week to stay within time. It is certainly a 1-hour presentation, and it should be a 1-hour presentation. Okay, so I'm utilizing uLaw, which is a legal accounting software, Canadian product out of Ottawa, product company rather. And we've been in this business for 10 plus years. We've been serving several hundred legal professionals across the province and across Canada. And I'm just using this as an example to show you the compliance documents that we just spoke about on those slides. Okay. So within uLaw, we have this easy, convenient button called Compliance. Each tool that you discover as you do your trial and understand what's best for you would have their own set of tools and buttons to help you generate these documents if they do. And it's important that you have an appreciation for the template and what's expected and the data elements expected across these documents. As I said, Googling the bookkeeping compliance and then reading that would really go a long way. But the documents generated by uLaw comply with the bookkeeping guidelines. This was built based on that. So for example, if I'm generating, let's say I am generating my trust reconciliation document, I'm going to go back here. I'm going to click trust reconciliation. You know, we spoke about how it's really the first important document. So closing out the month of February, on end of 28, I have these transactions, ins and outs. I've got 2,000 withdrawal, and we've got this in simple English terms, no fancy credits, debits. It's withdrawals and deposits. So on the 19th, because of this description, which is a trust transfer that was done for a legal fee invoice of 31704, this particular client, through this matter 412930, you had done a trust transfer, and hence $2,000 would be withdrawn from the trust account, as per what you're saying, this firm is saying, and should reflect of $2,000 into the general account on the 19th. Okay, so we don't know which account it went into. So if I were to check my general ledger, there you go. I see $2,000 on the 19th was received for the same reason, and this was a deposit into my general account. So you can see the story that $2,000 left the trust account and entered general account. You have seen the withdrawal from the trust account. You've seen the deposit into the general account. Okay, so that's the story. Now we need to put that into a document, into a script, into a screenplay that people can understand the story. Okay, that's all there is. So what are the elements of this? As of which date are you telling the story? So it's relevant. So if I generated this for the month of January, you can see there are no transactions, which is fantastic because you reconciled up to that date. So you're current on a monthly basis. So let's go back to the month of February. As of the end of February, here are all the outstanding transactions that are yet to be dealt with. So this is where technically you would open up your TD, CIBC, RBC, credit union bank, online bank statements, or open up the printed statements that you have. And we spoke about comparing the truth of the bank with what you have in your bookkeeping system and saying, so let's assume that on the 19th you say that you did the transfer. Sometimes it may take a day longer for the bank to reflect. So the bank has reflected this transaction to have been present in their database, but their database says the 20th. You can change the bank date, and it's totally fine because it's well within the realm of the 28th. So what this really means is that you've accounted for. You're now confirming to yourself and to the story that you're telling the auditor that, yes, I have looked up my bank, I have looked at my bookkeeping system, and this $565 does exist. It is true that is on the 19th that this money was withdrawn from the trust account. Likewise, I'm saying on the 19th itself, or rather it's the other way around, 565 was received, and if the bank also states the 19th, you can leave it at that. Likewise, you're going to go through each transaction that you have recorded in your bookkeeping system and compare it with the bank, almost solidifying the truth. Because if, let's say, this particular retainer of 665 has been reflected in your bookkeeping system as having deposited, and we spoke about that example where maybe you forgot to physically deposit this check in your bank. Now, let's say you open up your bank account and you do not see this line item, right? That's where you're going to say outstanding deposit, and you're going to leave the 665 right there. You can see the outstanding deposit is 665. So if this particular transaction cannot be accounted for, then you're going to leave it as an open item. You're not going to be able to account for it. Either you have to run to the bank, deposit that right away so that it gets deposited within the 28th, or you come back and do your reconciliation on the 1st of March once the number has been then done, or you can reconcile by telling the auditor that unfortunately I could not account for this because I did not deposit it, leaving it as an outstanding deposit. Okay? But for simplicity, I'm going to account for it, and I'm going to just put the balance. And I'll say okay. Now you see right away you have the reconciliation button. You'll also provide your ability to preview on a weekly, daily basis if you have to, so you can all catch up more often than wait for the end of the month. But that's for another day. Now you generate the reconciliation report. This report, as you should expect, would have all the components as expected by the Law Society for a reconciliation document. Once reconciled, as I mentioned earlier, generating the documents include the 2 ledgers, the 4 journals, and here are all the other documents that are required, specific. And again, I'm logged in as a legal professional in Ontario, and you have the 9A right here that you can generate for a time period. But if I were to just generate a trust ledger, I'm going to close out with this because I want to be cognizant of time. So let's say I am generating a monthly ledger, and that's what's expected by the Law Society. I'm going to go ahead and say, all right, for the month of February, give me my trust ledger. And let me quickly open up the trust ledger. In the meantime, for the friends that are on the webinar, if you have any questions, please feel free to use the chat window to start asking those so that my support staff can start to accumulate those questions and we can answer them. So here is the trust ledger for the month of February across all clients. You can see for Mr. John, who's a client. 565 was received. 339 and 226 were two separate line itemed aspects of the same invoice, 3171. Okay, so there's two separate legal fees, leaving the balance of 0. And you did do the trust transfer through that particular invoice, 3171. You've got different clients at different stages. Now you can see from Mr. Kabir Bedi, there is a balance after the 28th of February of $1,000. You received $2,000, you received another 1,000, and only $2,000 worth of trust transfer has been done, and hence there's still $1,000 left. Now this should be listed in your trust reconciliation as part of your client's trust listing as outstanding balances, because that $1,000 is inside this 981. Okay, if I can quickly search up, here's the instance, and there it is. On the 19th of February, as of that date, Mr. Kabir Bedi has $1,000 still left in the client's trust balance, and this is the total list of that. And you can see we've color coded it because these are over 3 years old. They're really something that you have to look at, so they're brown. Anything further than 5 years would be in red in the document itself. But important steps, so you've got the balances, you've got any outstanding withdrawals or payments, any deposits, any errors, all of that accounted for, nothing was wrong. You've got all the clear transactions, the client's trust listing, which adds up to the $981,000. And the last step is the total reconciled bank balance and the total unexpended balances as per the bookkeeping system. Okay? So with that, I will wrap up today's webinar. The intent of the webinar and the hope for the webinar is that you appreciate and understand the bookkeeping guidelines, the documents that are expected out of you as a legal professional, and how you can stay aware of the expectation and how you can prepare yourself from day one to meet those expectations with flying colors. So once again, I thank everyone for joining me today. It is being recorded and will be available in our YouTube channel as early as Monday next week. And we do have this in our YouTube channel across, and they're labeled as CPDs at the end of it. You can see uLaw Webinar CPD, and this is under our webinars playlist. Okay, so thank you everyone for joining me. I do apologize that I didn't leave enough time, but I'll wait for 2 more minutes to answer any questions that you may have, and then I'll bring this to a wrap. Thank you. Okay, I do have one quick question, and please, for those who do have the time, please do stay along. If not, you should be able to hear this in our recorded session. I apologize for taking longer than the time. And the question is about generating the Form 9A. Now, there's 2 ways of doing this. One is you can generate these Form 9As as and when you do the trust transfers, or in the case of uLaw, you can generate them at the end of the month, end of the week. We do have the opportunity to generate this on a timely basis, which pretty much accounts for all the electronic fund transfer transactions, and we give it to you in a single PDF. We merge all those Form 9As in a single document for you to print, review, and sign off on. So here is for Lauren Patrick. We've got a Form 9A for Kabir Bedi for that $2,000, if you remember. It has the total amount, the legal fee of 3170. So you are able to generate them in 2 different ways. Hope that answered that question. Well, thank you everyone for joining me today for today's webinar. I hope this was an informational session. feel free to email us with any other topics that you would like for us to cover in the coming months. And have yourself a fantastic weekend ahead. Thank you.